Very good evening, friends. This is NIRAJ SURATWALA. I have been a trader and an investor as well since quite a long time. I have been practicing WD Gann methods and numerology on stock markets. There are lot many things to apply, but these two are the main tools which have been proven fruitful in my trading career. So basically, numerology, when you hear it, it sounds different and how and what role it has to play. And if there is a role to play, then how to apply it and how to check the results. These are the two main important things as a beginner to understand. Fine. So I will not go much into the details as numerology is a vast concept. There are a lot many influencing factors, including planet cycles, including element energy that is being emitted by different planets' rotations, and there are many other fundamental factors that is to be studied. But in a nutshell, or just to simplify and just to make you believe that how it can work, I have just taken a small concept among the whole study, and that is power of number 81. Number 81 is very important. If you take a square root of 81, you will get 9 number, and 9 number has a very significant, you can say, influence on each and every moving object. A moving object means anything that is not manipulated, that has a natural movement. Say for example, if you take any penny stock in stock market, there are more chance to get manipulated the counter. But if you take the index, say for example Nifty, there are very less chance to manipulate it. Fine. So we usually apply all those kind of studies on indexes or any high volume counter such as Reliance, Oro Pharma, HDFC Bank, and all. As of now, we'll just consider Nifty. Okay. So this is my first experience of sharing the screen. So just bear with me if I may not be that efficient in terms of using this technology. Okay. So here I have just started a TradingView application. You all must use this application. It is amazing and at free of cost. So here I have taken zigzag study on the screen, in which I have kept the deviation at 10% and depth at 10%, at 10, right? And you must tick on extend to last part. So we must first look at the important impulse point from where the trend has recently changed. Say for example, if I am taking this top date, that is 28th August 2018, where Nifty has made a significant top which was untouched throughout some days, right? So this is an important point for me. Again, this bottom is an important point for me to calculate 81 number. I will show you exactly how. This top is important for me. This bottom is important for me. Fine. So I will be using all these points to analyze in future what I have to do and what I have not to do. So let's take this point. I will go here. I will select date range and I will simply just calculate 81 bars from this point, and here it is. So just to simplify, I'm again drawing it from here, so that you can clearly see that particular candle's high and low. So this 19 July 2018 is the day where we get 81th bar from this point. Fine. So what is the rule now? This price candles high and low is very important for me. So what trade I have to execute is determined from this high and low and next day's trading movement. So if next day high of this day is crossed and if we get closed above this day's high price, we must initiate buy trade. Vice versa, if next day we get a close below this low price, we must initiate a short trade. If we initiate a short trade, our stop loss will become high of this candle price. Vice versa, if we are buying next day, then low price of this candle will become stop loss for us for the trade that we execute. So what is the high? 11,006.50, and next day what close we get? 11,010, right? So that means buy has been activated. So next day we will initiate a buy position and we'll keep a stop loss of 10,935, which remain untouched, okay, from 19 August till 21st September 2018. Low of this level candle remained untouched, and in between this period it has made a significant top of 11,760. That means almost 6.72% movement we have achieved in just 36 days. So in 36 days 6% return is not bad enough, right? So now the same theory we will apply on each and every part and we'll just check whether it's working or not working. Okay, sometimes it may happen that stop loss may get triggered, but we are just assuming that the system is working and we are following the system just to analyze whether in end result we are getting something or not. I'm just removing the drawings and again selecting date range. Now from this point we will calculate 81th bar, and that is this was the 81th bar. So the rule is very simple. Now this price candle is a level candle for us. Let's see what happens next day. The high of this candle is 10,893. Let's check whether next day what close we have got printed. 10,862 and the high was 10,893. So buy trade was not activated, neither buy nor sell was activated, as the low price is 10,817 and next day we got a close of 10,862. So no trade. Next day we got a close of 10,910, which is above the high price of the level candle, that is 10,893. So the buy was activated here, and next day we have bought the Nifty, right? And here we can see the same day we got a close of 10,792. So the level candle's low price was 10,817, so our stop loss is hit here, right? So here we made a loss of, let's check the opening price, 10,862. Assume that you have purchased near to the opening price and you stop loss was 10,817. So approximately 50 point of loss you have made here. Okay, let's check another date. Now this point is to be utilized and we'll calculate 81th bar from here. 81 is here. Fine. So this is my level candle. 21st February 2019 is my level candle, and there it is clearly visible that next day no trade was activated, and on 25th February it is very clear that buy was activated, since we get a close of 10,880 rupees, which is above the high price of the level candle, that is 10,808. So since buy is activated, next day open, whenever on whichever rate it gets open, we will buy it. So assume that at 10,775 or near to that level we have bought a Nifty, and let's see whether it's very clearly visible that the low price remained untouched. If I calculate, if I just see, the low price is 10,721, and here it made a low of 10,729. It is still above the low price of the level candle, so no SL has been hit here, and it has given a fantastic upside move. Let's also calculate that this was the day when we had initiated a buy position, so that from that open price we have seen return of 11.57% in just 97 days. All right, now let's take another example. Now we are going to use this top. We'll calculate 81th bar. 81th bar is here. So this becomes our level candle, and it is very clearly visible that just day after that day sell was activated. We assume that we have initiated a short position here. All right, and from here to this point we got the stop loss hit, and we made a loss of, let's just exactly calculate price change. This was the day when we had initiated short position, so I will just calculate percentage loss that we have made. Just consider from this high only, it's 3% loss. Okay, so here in this trade we have made 3% loss. Let's go further, and we should use the same level again. Like if this was the level candle and here we fail in the short trade, here the stop loss got triggered, right? So we must see that whether what close price we have got printed on that day, and the close price was 11,586, which is above the high of this price candle, 11,554. That means it is a confirmation that there will not be a chance to get a downside move as the stop loss is hit. So next day you can reverse the position by buying the Nifty. So assuming that you have bought the Nifty at here, throughout this tenure we could not see any price candle even touching the low price of this level candle. Okay, so I usually do this, right? Usually do doubling whenever I get my stop loss hit, not on the same day but next day, if I have a conviction that yes, the close price is giving a clear indication that the trend is going to be further upside. In this case, I would definitely go long in that condition. So we'll just calculate the percentage change in this price, and from here we have seen almost 7% return, right? Which is fair enough in front of the 3% loss. Even if you just recover the 3% loss and uh, close the position, that is also preferable. Now we will again use this point 81. Okay, so 20 May 2020 is the level candle for us. Okay, level candle means the price candle which the price candle of high price and low price is very important for us. Whenever in subsequent price candle we get a close above the level candle's high price, we will initiate a buy position, and whenever we get a close below the low price of the level candle, which means 2020 May 2020, we will initiate a short trade. So here it is very clearly visible that next day close price 9106 is above the high price of the level candle, that is 9093. All right, that means a buy is activated and next day we are supposed to buy Nifty. So here I have assumed that I have again purchased a Nifty. So I will just calculate returns, and till date I could get 31% return in just 140 days, right? And it is very clearly visible that level candles, I mean 2020 low is just untouched throughout this tenure, right? So this is where you can practice in all index or the instrument where you find sufficient liquidity, as well as um, the volatility is on the lower side. Such indexes are really helpful for us to apply this method.